today's episode of the Daily Dose. Today is Monday, December 5th. The markets were down pretty heavily today, as to be expected from the levels that we were at. We talked about it last week. The S&P 500 was down 1.8%, the Dow was down 1.4%, the Nasdaq was down 1.9%. The economic data front provided further bearishness signals for stocks as key indicators came in stronger than expected. The leading the economic calendar for the week was the release of the Institute for Supply Management Services Index, and it expanded faster in November than anticipated. And that painted a picture of a still strong services industry. So further kind of showing that the interest rate hikes haven't yet been felt by that industry. That doesn't mean that it won't be felt, but they haven't been felt yet, and usually that comes in later. It's lagging. So as you can see, we've still had steady jobs being added to the market. Obviously, it's down from when we had mass unemployment after COVID, and so obviously there were a lot more jobs being added then. But what would you expect from a market where interest rates are rising as fast as they are? Is you would expect for this number to continue to drop off, and they've kind of remained steady, which is interesting, which is a further quote-unquote bearish signal. Because it just goes to show that the Fed can keep their interest rates higher for longer. So really what the market's going to be looking to is the next FOMC meeting and the interest rate hikes. So the market's really expecting 50 basis points next week, and I think if we get 75, the market will really tank bad. That would be something that the market wouldn't be expecting, and it'd probably push up the expected federal funds, the terminal rate for that. So that'll be something we'll have to watch really closely. But what I really want to talk about are the technicals here on the S&P 500, because we talked about how the market broke through the 200-day moving average, and that's usually a very, very bullish signal. But until we broke through this trend line, we wouldn't know for sure. And what ended up happening is we bounced right off the trend line and came down, and we actually went back under the 200-day moving average. So while the 200-day moving average is very, very important and is usually a very, very good indicator of trend changes on the market when the market closes above or below them, we know now that the real indicator of this bear market is going to be this trend line, because the trend line was respected more than the moving average. So this is really going to be the signal of when this market is over, is when we get a conclusive close and move above this trend line. But for now, the trend line was respected, and we're moving down. We're moving back lower. We bounced off the top of our range here around the 39.80. We're above that now at 39.98. But I do expect some more selling pressure here, as we're still kind of right underneath the trend line. So the S&P 500 for me is looking bearish. For others, they might see this trend here and say, we're pulling back and we're going to move higher. And maybe it will, but for me, it's looking bearish off of the trend line, because none of the fundamentals in this market have changed yet. And every other time we've touched this trend line during this market, we've gone significantly lower. And while the fundamentals are the same, the trend will continue to be your friend. The trend is always your friend. So let's take a look at Bitcoin. So Bitcoin kind of flat, kind of consolidating here around the 17,000 level. I would expect that if the market does have this leg lower, now that we've bounced off the trend line, I'd expect Bitcoin to continue lower as well. And yes, I'm still eyeing the 12,000 number. You've heard me preaching about the 12,000 all the way since we were back here in June, and I've been talking about it. And I still think we will hit it. So I'm looking at the 12,000 to the 10,000 to pick up some more Bitcoin to add to my wallet. You don't have to do your own research. You can pick some up here. You can pick some up down here, whatever you want. Or you don't have to pick it up at all. Do your own research, come to your own conclusions. But yeah, that's what I'm looking at. I think Bitcoin's been really correlated with the S&P 500 in this market. I think there's still a lot of news to come out around the domino effects of the FTX collapse. I think the sentiment around crypto in general is really, 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 really bearish, and I think that that'll everything imploding and exploding in the crypto market will continue to drive the Bitcoin price down. But I think the fundamentals of Bitcoin have never been stronger. And so that is the reason that I'm looking to add to Bitcoin and solely Bitcoin at this point in time. So that's why I'm looking at the crypto markets and the stock markets. I hope everyone had a good weekend and a good Monday. I'll keep you updated this week. I really appreciate you listening or watching this episode, and I'll see you tomorrow.